Hey VA borrowers, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer in Raleigh, North Carolina, and a United States Marine Corps veteran. Today, I want to talk to you about the new year, right? Happy 2025. Let's get into some considerations for various types of income when you cross a new calendar year. I'm talking about variable income, self-employed income, including 1099s, and also rental income. Let's take a look. So one administrative note real quick, if you've applied for a mortgage loan toward the end of last year and you haven't got under contract yet, and maybe you will be over the next few weeks, at some point you will need to supply your 2024 W-2 to the bank that you're working with. Usually we only need 1 year of W-2s, but in case that's two, you now will be supplying 2024 and 2023. So for everyone out there who has variable income, crossing that new calendar year can be a good thing, especially if your income has been going up. So what constitutes variable income? That could mean any income that is not based on a base salary, right? So if you make $120,000 a year, your base monthly salary would be $10,000 a year. But if you have any income that is not essentially guaranteed by the employer, that is called variable income. So maybe overtime income, part-time income, commission income, bonus income, all of these things would be classified as variable income. For the most part, the way variable income is calculated is that we take a 2-year history of that and we add it up and then divide it by 24 for 24 months. So now that we've reached a new calendar year, it becomes much easier to calculate those totals. Usually we use year-end pay stubs that itemize your different categories of compensation, right? Maybe you have some bonus pay, incentive pay, and then we isolate it and average it out. So if you made more money on your variable income in the year 2024 than you did in 2022, now we get to kind of drop 2022 and average 23 and 24, hopefully giving you more qualifying income and giving you, a bigger budget within your mortgage file. Another consideration is if maybe you're not full-blown self-employed, but a 1099, if you're filing your first Schedule C or you're not filing a Schedule C, this is important. 1099 work is not as rigorous for mortgage analysis purposes as a self-employed borrower, but we do need to see what you're doing with your expenses. Are you using expenses to offset your taxable income via a Schedule C on your personal 1040 tax return? If you are, we need to back those expenses out when we go to calculate your gross income. So if you made $100,000 a year adding up your 1099 income, but on your Schedule C, you claimed $50,000 worth of expenses, then you only have $50,000 worth of qualifying income for that year. If you don't file a Schedule C, we essentially use the total 1099 income. Okay, so for you folks out there who own some rental properties, right, some investment properties, this could be important as well if you've never reported any taxable income from an investment property. Why is this so important? Well, once you cross this sort of magic threshold of having 1 year of experience as a landlord, then subsequent investment property purchases can become easier. And we can pull income from other files when we're using qualifying income. It's a lot easier to do that once you've hit that 1 year mark. So you will end up filing any income that you have from a rental property on a Schedule E on your personal 1040 tax return. So make sure you are filing that Schedule E, because if you are not, then those rental property liabilities, right, all the costs and payments and obligations associated with that rental property, principal and interest payment on the mortgage, taxes, insurance, HOA dues, all that kind of stuff, those will be counted against your debt to income ratio. And if you've owned that property for more than a year, there's nothing we can do to give you income anymore, even if it's within that 1 year mark. But if you report rental income on your Schedule E, we can use that in your file to help offset that payment. So be sure to be filing a Schedule E for all you investment property owners. Okay, finally, for all you self-employed borrowers, and that could be sole proprietors, members of a partnership, members of an LLC, S Corp, all those sorts of structures. If that is you, then this time of year is really, really important. You may want to think about whether you're going to buy a house in early January. Today's the 17th of January, 2025. Or maybe you want to push it back until after you've filed your 2024 return, right? So if maybe you're filing an 1120S or a 1065, business return in addition to your 1040. If in 2022 you just got started and you didn't really have all that much income, but 23 and 24 were big years for you, then you may want to wait until you've got your returns finalized. Keep in mind, we can't use the income from that new return until it's kind of been accepted or processed by the IRS. Now, if you owe money to the IRS, as soon as the IRS cashes the check that you write for that tax liability, you're good to go. If you're getting a refund, it's a little trickier. There are ways on the IRS website that we can confirm that it's been processed, but it's not going to be an immediate step. So be a little bit careful. But if you're going to have a big step in income based on 23 and 24, like I said, you may want to pause a little bit because you could have a much bigger budget by waiting. The other thing is maybe you're going to avoid doing a bank statement loan, something that would be considered a non-QM product if you wait just a little bit longer. So be sure to talk to your loan officer about, hey, it's a new year. I'm about to file my taxes. What should I be doing? So we're in this kind of transitionary period for people with variable, self-employed, or rental income. Be mindful that you may want to check in with your loan officer if you're still searching for a home, and make sure you understand how this new income or how we will differently calculate your income could impact your ability to purchase a home or could impact your overall budget. Again, I'm Steve Doherty. I'm the Raleigh VA loan guy, a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. Thank you so much for listening. If you have any questions about this video or want some more in-depth information, please feel free to reach out to me via email, text message, leave a comment below. I'd love to hear from you.